Trading has become a modern vehicle to build wealth, secure financial freedom, and create new opportunities. Whether you're a complete beginner just hearing about trading for the first time, or someone who has been curious and wants to go deeper, this guide, will take you from a beginner to a confident, skilled trader capable of understanding how the financial world truly works. Trading means buying and selling financial assets, stocks, cryptocurrencies, commodities, foreign currencies, and more, with the goal of making a profit. And here's the most exciting part: anyone can trade. You don't need a finance degree. You don't need to live in New York. You don't need to be rich. You only need education, discipline, and strategy. This is the new world of finance, and you are now stepping inside. To truly become a master in trading, we will explore each stage of the journey. What is trading? How does the stock market work? What are the most trusted trading platforms in the United States? How do professional traders make decisions? How do traders protect money and control risk? How do beginners avoid mistakes and build knowledge the right way? And ultimately, how can you go from a beginner to a confident expert? Let's begin. Trading exists because financial markets exist. Markets where companies, governments, banks, and everyday people participate. The U.S. financial market is one of the largest and most powerful in the entire world. Here, every single second, millions of shares are being bought and sold. The stock market is where companies like Apple, Microsoft, Tesla, Amazon, Nvidia, and many more are traded daily. When you trade a stock, you're buying a piece of that business. If the business grows, your investment grows. If the business performs poorly, your investment falls in value. Trading is different from long-term investing. Investing usually means buying and holding for many years. Trading means seeking profits in shorter time periods, sometimes months, weeks, days, or even minutes. A beginner trader learns price movement. A master trader understands the market behavior behind price movement. Before we go deeper, let's answer a basic question. Why do Americans trade? Because trading allows financial independence. It allows people to grow their money faster than traditional jobs. It allows flexibility. You can trade anywhere, anytime. It allows opportunity. Even small amounts of money can grow when the right decisions are made. Trading, when done smartly, can become a skill that pays you for life. Every trader must understand the different categories of trading. One of the most common is stock trading. Stocks represent ownership in a company. We also have Forex trading, trading international currencies like USD, EUR, GBP, JPY to profit from global economic changes. Then there is crypto trading, the new wave of digital assets like Bitcoin and Ethereum, where market movements are faster and more volatile. We also have options trading, a more advanced level that allows traders to make predictions on price without directly owning the asset. Each category offers unique opportunities, and mastering them requires education. When you first start trading, the journey begins with creating an account on a regulated trading platform. In America, reliable platforms include Robinhood, TD Ameritrade, E-Trade, Fidelity, Charles Schwab, Webull, and Coinbase for crypto. After setting up, you deposit money. Even $50 or $100 is enough to begin learning. You then choose what to trade: a company stock, a cryptocurrency, or a currency pair. But remember, trading is not gambling. Smart traders do not click buy and hope for profit. They study, they plan, they follow a strategy, and they always protect their money. There are two main methods used to analyze the market: fundamental analysis and technical analysis. Fundamental analysis studies the company itself, how much money it makes, how fast it grows, what future potential it has. For example, Tesla stock rises when electric vehicles demand grows. Apple stock rises when iPhones sell successfully. Amazon stock rises when online shopping increases. A beginner learns these basics. A master trader becomes skillful at spotting future trends early. Technical analysis is the study of price charts. Traders use patterns, candles, indicators, and signals to decide whether a price will go up or down. Beginners learn what candlesticks mean. Experts understand the psychology behind those candlesticks: support levels, resistance levels, trend lines, volume. These tools help traders make smart entries and exits. Great traders don't just look at charts. They read the market's emotions through charts. Risk management is the difference between a losing trader and a successful trader. Professionals never risk too much on any trade. They would rather miss opportunity than lose money. They set stop-loss levels so losses stay small. They set take-profit targets so gains are locked in. They think long-term, even when trading short-term. Emotional traders lose. Disciplined traders win. Every beginner must avoid common mistakes. Trading with borrowed money. Holding losing positions, hoping they recover. Following memes, rumors, or hype. Trying to get rich overnight. Trading without a plan, a master trader learns patience. Learns that every trade does not need to be profitable. Learns that consistency is more important than excitement. Learns that surviving the market is step one. Growing wealth comes later. Trading psychology may be the hardest part of all. Fear and greed destroy traders faster than any chart. When markets fall, fear pushes beginners into panic selling. When markets rise, greed makes them buy too late at high prices. Master traders understand their own emotions. They never chase the market. They wait for the market to come to them. Successful traders treat trading like a business. They keep records of their trades, learn from mistakes, measure performance, and always improve. No professional in America becomes a master in one day. Mastery comes from experience. As you rise from beginner to master, you learn that trading is not always about making money. It's about protecting money. Professional traders stay in the game for years because they manage risk. They focus on small, consistent gains rather than huge, risky bets. They understand that the market will always be here tomorrow, so never rush. Economic news affects markets. Interest rates, inflation, government policies, global conflicts all change prices. American traders pay attention to Federal Reserve announcements, job reports, oil prices, and world events. Masters prepare before news events, not after the market moves. Each trader must develop their own unique strategy. Some prefer day trading, fast trades within the same day. Others choose swing trading, holding trades for several days or weeks to capture bigger market moves. Long-term position traders prioritize major trends that can last months or years. Your style depends on your personality, schedule, and risk comfort. But remember, all great traders were once beginners. The key steps to become a master trader. 1. Learn the basics of markets. 2. Understand technical and fundamental analysis. 3. Use a safe and regulated platform. 4. Start small, trade small, learn big. 5. Follow risk management every time. 6. Control your emotions. 7. Study, practice, improve. 8. Keep a long-term vision. 9. Stay updated with U.S. market news. 10. Build discipline and confidence. In trading, confidence should come from knowledge, not luck. Knowledge lasts forever. Luck does not. There will be losses. Every master trader loses sometimes, but they do not quit. They learn. Losses become lessons. Lessons become experience. Experience becomes mastery. Trading gives you financial power. It gives you the ability to grow money. It gives you a personal skill that nobody can take away from you. It gives you the freedom to choose your future, not wait for someone else to give it to you. You are not just watching a video. You are building a skill. You are entering a world where your decisions shape your financial destiny. You are stepping from beginner into the path of mastery. Every American beginner watching this, you are now a student of the market. And if you stay disciplined, stay focused, and continue learning step by step, one day you will call yourself a master trader. Because mastery begins with the first step, and you have already taken it. Welcome to trading. Welcome to financial freedom. Welcome to your new future.